This is Greg Vincent here at the 2009 Farm Journal Media Marketing Rally. Talking with Bill Biederman today. He's from Allendale Commodities. And Bill, you talked today about some of the things you were watching on the roundtable and what some of your concerns are and what you're watching. So just start there with the big things you're watching in the market.
Okay, well, obviously everybody's concern today is the bubble, and will it break and pop, and how and fast, and all that good stuff. So the funds are certainly a big part of that, and probably 90% of what I heard today was, when the funds sell, I want to be the first guy to sell. That's going to be hard to do. So we're looking at the fundamental side of it, and we're concerned about the feed use being overstated by USDA. We're also thinking that maybe, and we have debate within the office that maybe the crop will get bigger, but the bottom line is that feed use, and we know exports are running behind, so carryover in corn will probably be bigger than we know it today. You add that with next year's potential production and a little bit of an acreage increase, and we're probably looking at maybe we should get some corn sold. How do you do it? We would be selling in the old crop some March futures or March cash delivery, but take advantage of the carry. I really wouldn't do cash because of the basis. I'd do the futures and wait for basis to improve. But in the new crop, we'd be buying some puts and selling some calls. You can buy a 440 put as a floor and sell a 520 call as a ceiling price. That's a pretty good price spread for 20 cents cost. That can make a guy some pretty decent money. So we would definitely do some of that. Because one thing I did hear today is that nobody knows when the top will come or when the bubble will pop, but it will. In the soybeans, it's all going to unfold in January. You got in January the USDA report. Several of the guys here today said they expect larger yields. Many people said they're concerned about what China is going to do, and if China starts to cancel, that'll void the market and leave only buyers left would be the speculator, which is not a good bet. So we would make some sales on beans too.
Are you as concerned? There's some concern from some of the people on the panel today about some of the regulation that may be coming down with position limits from CFTC and then some other issues. Are you as concerned about those types of things, or you think it's going to be more of a fundamental issue?
No, I think that's going to be the big straw that's keeping us up here is the fund buying. So if they do anything to alter that, it would break that straw and pull it out from under it. So that's certainly an issue to watch. We don't know what they're going to do, but they're supposed to make an announcement soon. So I think we'll know within 30 days.
There's some pricing opportunities potentially for next year right now. Is this a good time to be pricing your crop looking out to 2010?
It really is. I mean, we're like 30% on corn for new crop, but really I think if you're doing a box strategy like I just described with the put and the call thing, you could go all the way up to 75% because you're not going to get hurt if it rallies. You'll still participate. In the soybeans, I noticed here in the soybeans it was a little bit of a mixed opinion on them, but we're at a great price. We're pushing $11. So yeah, I would lock it in.
Okay. And Bill, you've been in this business for a while, and just looking at some of the differing opinions today with 15 of you on the panel, there were very clearly 15 different opinions to many of the questions asked, which I think really indicates that there's some differences in how you guys think about the markets and some differences in how you work with your customers. If you're talking to a new potential customer, which you are right now, what do you tell them about, not everybody's going to be right to work with Allendale, not everybody's going to be right to work with the next guy. What do they need to look for as they're getting a feel for what you might be able to help them with?
Right, that's a great question. I think the number one thing is that can you establish a trusting rapport? Because that's, when you're talking with people's money, you're talking a personal thing. So a trusting relationship is number one. Number two is a philosophy, similar culture, similar, so that you get along on that. And, you can't mix oil and water. So if you're not on the same culture side, you can try it. But what we look for is we're a more conservative company. There's other companies that are more aggressive and are going to trade in and out a lot. So, it just depends on what fits your temperament. There was some good advice here, really good advice about working with somebody and how to do it.
When you talk about the difference between conservative and aggressive, how are you defining conservative as opposed to the aggressive nature?
Well, I'll give you one example. Like on a conservative new crop approach, rather than just selling everything, okay, well then you're either right or wrong. Well, we would go into a box where we put in a floor at today's market at $440, put a ceiling pricing at $520, and wait and see what happens. Other guys are going to, and none of these are wrong. Other guys are going to sell the market here when they get a sell signal, and then if it goes up and goes through resistance, they're going to buy out of it. They'll take a loss, but then hopefully they'll sell it higher. So it's just which approach fits you. You know, do you want to take trading approach, or do you want to take like a box approach, or do you just want to sell it and be happy with that? And some guys here are saying, you know, don't even use the board, just sell cash. Well, we were part of a grain elevator. We don't want to do that. We want to take advantage of the merchandising, carry, and basis approach.
All right. That's Bill Biederman, Senior Vice President with Allendale. Appreciate it, Bill.
Thank you.